Most people think the only way to prepare for retirement is through a 401k or an IRA. But here's the problem. Those accounts, they lock up your money. They hand over control to Wall Street, and then they punish you with taxes and penalties if you actually need your money. So I did something different. I built my own private banking system. And I use that banking system to purchase assets that will pay me forever. In fact, I'm using infinite banking to purchase Dividend King stocks. We're talking about like Pepsi, Coca-Cola, Johnson & Johnson, Procter & Gamble. These are companies that have paid a dividend and increased that dividend every single year for over 50 years. And what that's doing is that's adding to my passive retirement income. By the end of this video, you will understand how infinite banking can enhance any investment that you make, and why pairing it with dividend-paying stocks is probably one of the best retirement strategies that you have never heard of. My name is Devin Burr. I went from broke, and I mean literally broke. I had $300 in my bank account after having to file Chapter 7 bankruptcy in 2016. I was a full-time single father to my 9-year-old daughter Haley, and we were nearly homeless. Now, I'm able to fund investments, real estate, even buy cars through my own private banking system. The game changer was infinite banking. Instead of giving up control to the traditional system, I learned how to redirect my money into a place that I control, that compounds guaranteed for me tax-free. And then I can simply borrow against that anytime for whatever I want with new opportunities. What I'm doing is I'm combining that system, guaranteed tax-free growth that is protected against lawsuits and judgments, with dividend-paying stocks to build a retirement income stream that I don't have to worry about outliving. First, let's talk about the trap, the traditional system, your 401ks, your IRAs. You are literally trapping your money until you're 59 and a half. You are not guaranteed to make money. You can lose money inside of a retirement account. You're also not avoiding taxes. You're deferring taxes. So you're choosing to not pay taxes now when they're probably lower than they're going to be in the future. Taxes tend to go up. They don't tend to go down. So you're not paying taxes now on the seed to pay taxes on the harvest when taxes will most likely be higher. And the biggest thing is you're giving up liquidity. If an opportunity comes up where you can make a great return, your money is trapped. You can't use it. Generally speaking, you can only use 50,000 or 50% of your retirement account, whichever is the lesser of the two. Second, let's talk about the shift, how money goes now to infinite banking, which is a properly structured whole life insurance policy. It's guaranteed to grow with tax advantages. You're not taxed on your growth, and it is guaranteed. It's always going to go up in value. You've got to 90% liquidity of the money immediately in the first 30 days. Not the case with your 401k or your retirement. Now, also, the great thing about infinite banking is that you can borrow against the entire cash value. So you can literally use funds, borrowed money, other people's money. It's just the insurance company's money that they're letting you borrow. That means that your money that you're putting into your policy, your cash value, is always compounding and growing because you're not removing it. You're just borrowing against it. So you're continuing to get growth that is tax-free, protected against lawsuits and judgments in the background, doing its thing without fail year after year like clockwork, while you take borrowed money that you're borrowing against with the policy to go do your investments to make more money. So instead of funding your 401k, what you're doing is simply changing where the money goes first. You're funding your very own privatized bank. Then you're borrowing against it to go buy assets. So what's happening is you're making compound interest inside your policy, again, guaranteed, tax-free, and generally with dividends, And these companies that I'm talking about that we use for infinite banking have paid a dividend every single year for like 150 years. So they're not guaranteed dividends, but they're pretty much a sure thing if they paid them through world wars, through depressions, through meltdowns of '08, swine flu, bird flu, you name it. They're still paying dividends. So pretty much a sure thing. With those dividends, you're getting around 5 to 7% growth annually, and that is tax free. Now, you borrow against it to go make money in the asset. So, what you're doing is you're making money inside the policy and you're also making money outside of the policy at the exact same time. Now, this is tax free. Outside the policy is open to taxation. However, you can get around that too. And I'll link a video up here where I talk about that. It's called the buy, borrow, die strategy. Check that one out. Here's what I'm essentially doing. I'm funneling as much money as I can into these policies every single year. The more I put there, the more of a pile of money I have that's growing, guaranteed, tax free. And the bigger that pile of money gets, the more I can borrow against it to go buy assets like this. I'm buying these Dividend King stocks. So we're talking about Johnson and Johnson, Procter and Gamble, Coca-Cola, Pepsi, companies that have paid a stock, or I'm sorry, a dividend every single year for over 50 years. And then what I'm doing, this is essential. I'm having the dividend that's paid out from these stocks purchase more dividends. So as the dividend comes, I'm just actually reinvesting it into more stock. So the more stock I have, that's how the dividend works. You get a dividend payout basically based on how many shares you have. So let's say the dividend is $1.50 a share. If you got a whole bunch of shares, you got a whole bunch of dividend income. So what I'm essentially doing is I'm using the dividend to purchase more stocks. So that way I'm getting more dividends. I'm 40 years old. By the time I'm 60, 70, how much stocks will I have? A ton. I'll never sell them. That goes back to the buy, borrow, die strategy that I was telling you about a little earlier. I'll never sell them. I'll just, if I need money, I'll borrow against the stocks. Borrowing, there's no taxation. You don't get taxed on loans. So I'm using a dividend to purchase more shares. So that way, when I'm in retirement age, when I don't want to work anymore, instead of having that dividend purchase more stocks at that point, I'll use the dividend as a retirement income, a passive income source. Or I'll keep having it buy more dividends, which will keep giving me more of a stock portfolio. And then I'll just borrow against that stock portfolio if I need income. Because again, borrowing is not taxable. A loan is not taxable. So I could borrow against all my assets from my policies. Borrowing is not taxable. It's an asset. I'm just borrowing against it. I can borrow against my stock portfolio. I can borrow against my house. I can do all those things without worrying about taxation. Do I have to pay interest? Yeah, but it's a heck of a lot better than paying taxes, right? The highest bracket for taxes as of this video in 2025 is nearly 40%. If you add in state taxes and all that, it goes above 40. I'd much rather pay on a policy loan 5%. That's generally what it is, simple interest. I'd much rather pay that than 40%. Borrowing against my house on a home equity line of credit, it's about 8% right now. I'd much rather pay that than pay 40% to the federal government. In my opinion, they don't know what to do with money anyways. So that's all I'm doing, guys, is I'm putting money into an asset that's guaranteed to grow tax-free for the rest of my life, borrowing against it, borrowing is not taxable, to go purchase dividend paying stocks that have paid dividends every single year for over 50 years. And then I'm taking those dividends, reinvesting them back in to buy more stocks. So that way I have an ever increasing portfolio of stocks. And then that means I have an ever increasing dividend. So that way I have an ever increasing income stream. And I'm building legacy. My policies, because I put so much money into them, when I pass away, my family will get a huge, I'm talking huge, tax-free death benefit. It goes into my trust. My trust then dictates that the money has to go into more policies on other family members. So I have tax-free money. That's what a life insurance policy is. The death benefit is 100% income tax free. So I got tax-free money going into a tax-free environment because it's buying more policies. Policies grow tax-free. And then when that family member dies, everyone's guaranteed to die. The money goes back to the trust. The trust buys more policies that are going to grow tax-free. Do you see how my family will get wealthier and wealthier and wealthier tax-free because of how I set these things up? This is what the Rockefeller family has done for generations. The big picture here is instead of putting money into the traditional system where I give up control of the money, 401ks, IRAs, I'm redirecting that money into a properly structured whole life policy where it's guaranteed to grow tax free, it's protected from lawsuits and judgments, and I have full control over it. I can borrow against it anytime for whatever I want with no questions asked. And it's an ever increasing pile of money because it's always growing. It's guaranteed to do that. And I'm just simply borrowing against it, which there's no taxes on loans. I'm borrowing against it to go make money elsewhere at the same time. So I'm literally making money in two places at the same time. Inside the policy, it's guaranteed to happen. It's tax free. Outside the policy, I could lose money, but I'm putting it into places that I'm familiar with. I'm putting it into things that have a track record, like these dividend paying stocks. These are companies that have a track record, like I said, of paying dividends for 50 plus years. So I've got money working in two places at the same time when most people just have money working in one place at one time. I've got it working in two places. One, inside the policy, again, it's tax free, it's guaranteed, it's always going to do its thing in the background. Then I'm borrowing against it so I don't interrupt that activity that the policy is getting, that it's always going to get, to go put it into these dividend paying stocks. And then I'm taking the dividends, purchasing more stocks. When I get older and I'm ready to retire and I don't want to work anymore, I've got a ton of dividend pay just from the stocks. And then the policies, whew, I put $1 in and it pumps off crazy amounts of cash value because of how long it's been compounding. Guys, this is what the wealthiest individuals and the wealthiest families do. They use strategies that most people don't know about. And it's not like I'm smarter than you or, you know, Elon Musk is smarter than the next person. He just knows some things that you don't, and then he applies those things. I know some things that you might not know, and I apply them. And because I've applied them, I've become pretty dang wealthy. I'm a multimillionaire. I can do really anything I want. I don't have to work. I work because I like to. I put these videos out to teach you guys, to help you. I've learned that the more I help people, the more money I make. So wouldn't it make sense to help a lot of people? So that's all I do. I put these out so I can help you guys. And as I help you, I make more money. So it works for everybody. If you guys are in a place where, you know what, you're tired of giving up control of your money to Wall Street and, you know, having it trapped until you're 59 and a half, which is crazy, paying taxation that is probably higher in the future than paying it now. Guys, check out the description in this video. I've got a training video where I go into the nuts and bolts of infinite banking, and then you can schedule a call with my team and we can help you through structuring a policy that's built for you, that's built for your needs, that's built to do what you want to do with it. Whether it's buying dividend paying stocks like I'm doing, whether it's paying debt off, whether it's buying real estate, whether it's being a private money lender, which I do a lot of through my policies, whether it's building a retirement, whether it's, you know, paying for college for your kids, whatever it is. I am a firm believer that if money goes into a policy first, before you use it, it is the best foundation you can have because it is guaranteed to do its thing in the background. And then you use the money to go do what you were gonna do anyways with money. So if you guys wanna learn how to do that, check out the link in the description. And I'll tell you what, if you guys liked this video, you're gonna love that one. Check that one out. If you have not subscribed to my channel, do it. And please like this video. The algorithm loves when you like videos. I would appreciate that. It'll help me help more people. And selfishly, if I help more people, I make more money. So appreciate you guys. Love all y'all. Till the next time. Peace.